Hello guys and welcome back to the channel. So in today's video we're going to talk about a very impressive Swedish company from my home country that is actually competing successfully with Tesla with super little or minimal investment into the EV industry. And they are, because of this, very, very impressive. And they have a stock that is listed on the stock market. So I was thinking, let's look at how to compete with Tesla successfully and what is it that they're doing right, and if we should invest into this company. So as always, if you like this content, please make sure you hit the subscribe button. And if you want to support the channel and get exclusive content, check out our Patreon page where I upload exclusive videos and evaluation models that we use on this channel. So what is Polestar? Polestar is a Swedish automaker, relatively a new company. They have been the performance division of Volvo, and they decided to spin it off as a separate EV brand. And they have been very successful with it. They have very, very sexy designs. And I'm telling you guys, they're all over the streets in Sweden. Please let me know in the comments if you see these cars in your country. But in Sweden, definitely Teslas are the number one, but Polestars, you see them overall. And they are most known for their Polestar 2 design, which is this car right here, not in the best light, but let me show you. When they have the gray silver color with the yellowish or golden brakes, it's incredibly sexy. By the way, this is going to be important later. You see, this car is very Volvo-esque, meaning that I believe what happened is they had a very good boss who wanted to create MVPs like a real startup would, and they took a Volvo design and they just really made it nicer and pimped it up a little bit. When I didn't know that Polestar existed and I saw one of these cars on the road, I literally thought that this was a Volvo, and I had to learn that this was a different car. So here is the one that I mean when they have this yellow brake pedals. They don't show the nicest colors. Amazing website, very similar strategy to Tesla. That they are selling direct to consumer via a web page. And they are obviously very, very successful. So let's look at their financials and their investment strategies. And this is my first look at this company. So this is not a full research yet. This is my initial thoughts. And if you guys like this, then more videos will come on this company. So this is their Q3 2022 report. And they obviously talk about who they are. And obviously they have very good numbers because they are ramping up from a very low production. But I don't know if you're surprised by this. They're much ahead of Lucid, much ahead of Rivian. And they have just until September delivered 30,424 vehicles, and they're planning on delivering 50,000 by year end. And that is more EVs, I believe, than GM is planning to deliver this year, than Ford is delivering this year. I think Rivian delivered or they're going for 17,000 this year. Lucid is, I don't know these, but they're much less. So they're doing very good. 1.4 billion in revenues. They are expecting to get 2.4 billion in revenues in 2022 for the full year, and that is an 80% year on year. They obtained financing for 1.6 billion. This is also going to be important later because this is a double-edged sword. So they have a huge insider ownership because Volvo and Geely, I don't know if I pronounced this correctly, Geely is a Chinese auto manufacturer, and Volvo is also owned by, I think they're owned by Geely. So it's like very complicated ownership. And they own a very big part of Polestar. So this is very good because you have zero bankruptcy risk. As you will read it here, they are burning money as any beginning EV company would. But these big owners put in 800 million of loan into this company, and they are not going to let this company go to bankrupt. But here's the other edge of the sword, is because we know that this company needs money, and we know that the mother companies have money. I could already see in this report that they are giving loans, but obviously they want that these loans are convertible into equity. And if the world economy is not doing good, then you can expect quite a bit of dilution to the mother company. So that's obviously not good. So these are, their history, and here it's saying that they were founded as a racing team, and then they were the performance software developers for Volvo cars, and yada yada. They were acquired by Volvo Cars in 2015. My understanding is that they were spun out of Volvo, and the best top Volvo models in the past, they were called Polestar. So it's very, very good branding. This is the model. This is exactly what I was talking about. The super nice color. You see a lot of these in Sweden. They just came out with, this is the Polestar 3, their SUV version. Very, very sexy cars. Here's the thing. So why I'm very impressed by this company is because they are competing with Tesla for the least possible amount of money that you can compete with. They don't have their own factory, so that's a huge cost saving for an EV company, that they didn't have to build their factory. And again, this will be a double-edged sword. So they are using Volvo and Geely's factories, which means that they have a super rapid market release for their cars. If you saw, I think Polestar 2 was first shown off in 2017, and I already saw in 2019 Polestars on the road, and in 2021 they're delivering 50,000 of these cars. So very rapid to market. Obviously very low investment cost, but it's going to hurt the margins on the other end. This is another double-edged sword, which will be important later. Then when you go through this report, you can see that they are able to use Volvo's lines. They obviously straight away launched in 10 countries, which they go into here. This is their people that they're working with, super Swedish names, some of them. Here is their financials. So you can see that in the first 9 months of 2021, they were delivering they had revenue for 748 million, and in 2022 first 9 months 1.5 billion. Obviously this is very high because they're ramping up. However, gross profit, you can see that on the 1.5 billion, they only made 57 million gross profit. And this is very important because this is not profit, this is gross profit. So at least this number is not negative, but obviously this leads to a very big operating loss, which is over 1 billion. And this is where you see that they will need additional financing, and this is obviously not good for any company in this market environment. And why I said that the fact that they made a gross profit is good is because I think Rivian has a negative gross profit margin, and you don't even want to talk. I don't know about Ford's gross profit margin, but you take a look at companies like Lordstown Motors, and they're not even able to sell the cars for what it costs them to produce, and then you don't take into account any SG&A, R&D, and other expenses. So here it shows their cash flow statement. They obviously burnt a lot of money, but it shows that the partners put in short-term borrowings. And this is the borrowings that here they detail it in more details. 800 million. You can draw 150 million every month, 18 months tenor. And then it says optional conversion triggering if capital is raised for at least 350 million and with at least 5 institutional investors. So the bad thing in this is that We know that there's no way to repay this loan other than with an equity raise. And in this market, to raise equity, you potentially face a very high dilution. And this is where you don't know these guys, these big companies' plans, because they can also just get together and say, yeah, we save this company and then we take a lot of equity. And yes, I don't like this. This is a bit uncertain to me. And here they go into their production process. So here's the thing. This is where you see that these are the factories that they're using to make their cars, and when these factories were built. And you can see the factories are operated by Volvo cars, not Polestar, Volvo cars, Geely. And in 2024, maybe they will have their own factory in China. Here is where they go into their approach, how they sell to customers. Again, you can see that they have insanely good, super Swedish, super amazing design. So their plus points is that they are using Volvo's engineers. They are using Volvo's and Geely's factories, so very low initial cost that comes with these. They are even using battery packs from Volvo. They are using Android Auto for their software. So it's literally like a design team and a sales team. And again, it's a very valid strategy and it seems to be working. But I think that this is going to come and bite them in the ass when they are scaled. And as I said, this is my initial reaction. I didn't really find their future strategy. Doesn't mean it doesn't exist. But I would definitely like to see that they get more separated from the mother company. They get their own engineers. They get their own factories. So I a little bit wanted to go into the financials of this company. They were listed not so long ago on the stock market, and their stock price fell from the IPO about 50%, which is not that bad actually in the current market. But what is the potential that this company has? And because my understanding is so limited of this company, I try to keep it super simple. I read that their sales target in 2026 is that they're going to reach 20 billion because they're going to ramp all the Polestar 2, and they're planning to release one model every year. So let's give them the benefit of the doubt and say that they're going to reach 20 billion in sales. The problem with them is that they're targeting the luxury BEV sector. So obviously this is not an unlimited sector like Tesla, which is just going after the mass market. So they have a very limited market that they are going after. And I expect that they are going to saturate this market, and then their growth is not going to be that big. Then there is the gross margin. And as the company is very negative right now, you have to use other data points to estimate a possible future gross margin, what it would be for this company. And Tesla has full vertical integration. And according to the last report, they had a 27% gross margin and a 20% profit margin. Now, I think that this is insanely generous to give them a 20% gross margin, because they are using Volvo's factories and Geely's factories. And this is the other thing that I wanted to say, is that Volvo can also choose to screw the other shareholders and just increase the price at the factories that Polestar pays them. And then they basically keep all the profit of Polestar in the Volvo factory instead of forwarding it to the Polestar shareholders. So this is also something where I would like to get more clear information. Anyway, so let's say gross margin is 20%. Let's give them a profit margin of 10% when they are fully at scale. This would give them a 2 billion profit. If we slap a 20p on it, which I know is maybe not very sexy, but you have to keep in mind that they are planning to saturate the market that they're in. This would give them a market cap of 40 billion, and the current market cap is 11.4 billion. So that's a very nice upside in not a lot of years. However, I have a few concerns about this stock. One of them is it's unclear how the ownership and what is the contracts with the factories, because their own factories are not owned by them. This is the point that I just explained. Then it's unclear to me how much dilution is coming up. One thing that is clear is that they will need more money because they are burning a lot of money very fast. And this can be potentially something that can come back to bite you as an investor. And then I really want to know if they have a plan for vertical integration and having their own engineers, having their own factories, having their own lines, because that very much plays into this calculation right here. Because what if the profit margin only becomes 4%? Then suddenly the max market cap that they can reach is 16 billion, and then it becomes a very risky investment. And this can happen. All it takes is Volvo raises the Volvo factory raises the prices a little bit, and then they decide to keep the profit at the factory level and not forward it to the company. So this makes this investment it's an interesting investment, but I would want to do more research on it. So I'm definitely not buying yet. And if you guys like this video, then maybe I will do more videos on Polestar. Anyways, let me know what you think. I'm super interested if you see these cars in your country. They're all over in Sweden. They're definitely the number 2 after Tesla. So please tell me if you see them and which country you're writing from. Make sure that you're subscribed to the channel. Why not check out the Patreon link in the description box below, and I will see you in the next video. Thank you so much. Bye bye.